Hello and welcome to the Bitcoin Business Podcast. I'm your host, Brandon Karplus. This podcast is put on by Sovreign, of which I am the CEO of. This is the first week recording with actual, somewhat professional podcasting, or I don't know, recording equipment. I actually have a microphone to talk into and some headphones so we don't get some feedback on the sound. So, speaking of feedback, we heard lots of you reaching out on various platforms telling us that we had some audio issues. And so we appreciate that. And I'm going to make my editor's job a lot easier. And so we went ahead and hopefully this sounds a lot crisper, clearer, better than the other pods we've put out. We're always learning. So please keep telling us things you do or don't like about the show. We will make adjustments. And so hopefully this works out well for the audio files out there. Joining me today is Scott Deedles from Block Rewards, a Canadian benefits company. And this is just continuing in our series of highlighting entrepreneurs, business owners who are really just taking everyday businesses and things from fiat land and incorporating Bitcoin into it. And this is what we want to highlight, that there is this great entrepreneurial spirit out there, people doing what their former background was, and really just putting Bitcoin into the business. Now, Scott's business, we'll let him talk about it, but it happens to be a business where Bitcoin is actually the core of the business, and the rewards are in Bitcoin. The value proposition moving around his business is Bitcoin. But as we've highlighted on this show with many other guests, that it can be any ordinary business, and the way you incorporate Bitcoin is unique to your business, and that's what's so cool about it. So, without further ado, welcome, Scott. Thanks for joining, and why don't you tell us a little bit about what you're doing at Block Rewards?
Yeah, thanks for having me, Brandon. And I sympathize with you. We started a podcast of our own when we started the company, and I often look back at those early season one episodes, almost like the early episodes of The Simpsons, where the animation was kind of different, and it kind of looks like a different show. We went through our own journey of kind of figuring out what worked and didn't work. So, um, tons of fun.
It's the downside if you can just do stuff, right?
That's right. So, yeah, block rewards, like you mentioned. So I think this is very true in general of people who understand Bitcoin and then have a vision of the world where Bitcoin has been adopted. And I think as part of that, people who really dive down the Bitcoin rabbit hole often just get the next thing they do is start thinking about how Bitcoin could be applied to whatever area of expertise they've accumulated in the course of their careers. And this is, true for doctors, reimagining how healthcare could work. Um, you know, for me, I had spent my career in compensation or rewards consulting, doing a lot of work with, benefits and pensions, total rewards. And so I originally got interested in money printing before I got interested in Bitcoin. My Bitcoin origin story uh, birthed during the pandemic, and I'm up in Canada where I live. The Canadian government really initiated an unprecedented amount of public spending to sort of really keep Canada very closed. So up here, we were shutting our houses. Employees were being paid to stay home. Businesses were being paid to stay shut. And I just was, it was such a radical event in, a departure from how I'd been used to seeing government operate. And, government spending up here isn't something that's a normal idea in the way Canada works, but this was just so kind of next level that I spent the early days of the spring of 2020 studying monetary theory, history of economics, and Mises and Rothbard, and eventually I was actually recommended by Amazon Jeff Booth's book, The Price of Tomorrow, which is I think a lot of people's um, you know intro into Bitcoin. It's not expressly a Bitcoin book. It's a kind of a technology book about deflation, and so I wasn't even then. When I wasn't looking for Bitcoin. I had my eyes open, and after I read Price of Tomorrow, I immediately read it again, And then I just started like reading every Bitcoin book I could get my hands on. The Block Size Wars, the Genesis book, you name it. I got interested in the podcasts and everything. And then that exact thing happened to me. I started thinking about what would this mean for what I actually thought was kind of the early demise of the 60/40 portfolio, which I think in hindsight has proved to be true. And the 60/40 is really the bedrock for how a lot of different group retirement products think about target date funds or pre-allocated portfolio management for the average employee that really doesn't shouldn't be self-selecting investment allocations. And so where I originally thought was that there was going to be some kind of opportunity for a new kind of pension insurance product where the underlying asset was Bitcoin. And then as my understanding of Bitcoin continued to evolve and deepen, I think for me, you get to a place where Bitcoin is money. It's the best form of money that has ever been invented, and for that reason, the potential application for Bitcoin and the employment relationship is much, much, much more broad than just ensuring future retirement, like different retirement plans. I think that um, if we go back predating the sort of modern era of money, where it's legislated how we get paid in what currency, throughout the majority of human history, people would have wanted to trade their time and energy for the most desirable form of money. And this is exactly what happened in the fall of Rome, right? Like the soldiers stopped fighting when coin clipping annihilated the actual value of the physical money itself. So I think that yeah, we're at Block Rewards. We're building a whole suite of tools that will enable employers to imagine a world where people get paid in Bitcoin in lots of different ways. And savings plans are one of them. Incentives, salaries, signing bonuses. I think like it really could be, to me, imagining the way Bitcoin will be embedded into the digital economy of tomorrow is like you should be thinking about it in the same way as we were thinking about the early days of the internet in the 90s, where if you go back to when people were first getting kind of AOL in their homes and email, um,
The CDs that came in the mail.
right, and at that time, like they hadn't even solved how you could make an online payment, right? Like, so people didn't understand for a long time how the internet was going to be monetized and how businesses could exist on the internet because of the payments problem. And that technology, that innovation was subsequent to solve problems. And then 15, 20 years later, the biggest companies in the world, like McDonald's, is like an internet company, right? Like they do all these online sales and online advertising. And, like our thesis at Blockwords, my personal belief is that this same phenomenon is going to cycle around and play out again with Bitcoin really being, imprinted as the foundational, you know, means of exchanging value and storing value in the digital world. And if that proves to be true, then it will just be a fundamental tool for how we think about, you know, compensation and rewards.
Yeah, you were brought up the example of the end of the Roman Empire. It was similar in Europe as well when the Florence banks released the gold florin. Everyone said, well, that's the best money. That's the money I want to use. And I'm sure back in the 1680s or 1650s, I'm probably getting my exact dates wrong here, there weren't gold florin companies. There were just companies using the better money. And it is funny that we even call these companies sort of Bitcoin companies or whatever. It was just like the internet, the dot com boom. It's like, well, now every company has some dot com aspect to it. And it at the end of the day, people are just going to choose the best money because it's the best money. And to your point, we're going to look back in 10 years and we're just going to go, these are just businesses using the preferred form of money. And I'm sure in 1914 there weren't, Fed dollar companies either, or whatever the equivalent is. So it, yeah, I want to go back to something you said about the 60/40 portfolio, because I think, I mean, very prescient on your end that, okay, this is the beginning of the death of the 60/40 portfolio. It's interesting you said that too, because that was when we threw interest rates to zero. And in theory, right, if you had a 40% portfolio of bonds or I don't, I, I never did the 60 portfolio, so I don't even know which was supposed to be 60 and which was supposed to be 4. I think it was actually 60% bonds. But so if you had like 60% bond portfolio and they dropped those rates to zero, in theory, your bond portfolio just had a huge boon. But the reality is, your inflation was going to get so bad that you were going to be paid less on the coupon than the depreciation of your money. And that was going to come to fruition. They, of course, told us the inflation's transitory, all the BS we heard forever. Bitcoiners were saying, no, we're going to have horrible inflation because we flooded the market with dollars. This wasn't like the 08, 09 bailouts where they just put money on the bank's balance sheets and sort of recapitalized the banking system. This is like helicopter money making it into society, the PPP loans, et cetera, et cetera. And I, I think for the longest time, people were okay with the 60/40 portfolio because the people doing the central planning of the money got it to a point where it was like you just didn't notice enough. Where it was like, okay, I'm getting 4% back on my bonds, or I'm getting 5% back on my bonds, but the money's depreciating, or there's like a 7% increase in the money supply, but human productivity is kind of around the 2 to 3%. So you were almost kind of breaking even in terms of like real purchasing power between the value of your portfolio, the productivity of humanity, and then the money printing. It all kind of zeroed out. And that just got blown out of the water in 2020. I mean, just absolutely, 5 nuclear warheads landed on that sort of analysis. And now people have really woken up to the fact that, oh my gosh, holy cow, inflation is really bad. Um, I need to, People are now saying, I need to find a different place to park my money. They still would have been much better off parking their money in Bitcoin. The historical returns speak for themselves, but now it's like I actually have a need to go put that money. I am no longer sort of breaking even with my purchasing power. I'm actually getting destroyed in my purchasing power. And I'm curious if you've seen a change in mindset amongst people, a coming to this realization. And obviously, what you're offering here is a perfect antidote for that. And it could be an anecdote
It
too.
could be, yeah. Yeah, I mean,
Yeah.
I think that it was a lot easier for, government media to mask the true rate of inflation, when the amount of theft that was going on by the government was a lot less. And it's hit a point now where, you see all these posts online where people have taken a Walmart receipt from 2020 and run those same items today, and it's like more than double. So they can say that inflation is whatever, 3-5%, but like, everybody knows the price of eggs is 3 times what it was 5 years ago. And so I think that has been a real catalyst for a shift in perspective. I mean, prior to that, even another phenomenon which I think is important to acknowledge is, throughout the 2010s and even probably slightly before, we had already seen a migration away to people thinking about portfolios as being like entirely composed of stocks, which historically is another thing that would have been, you know, unusual and viewed as incredibly risky. And Bitcoiners often kind of like talk about this idea where the S&P 500 was sort of turned into a savings vehicle, because if you actually look at the expansion of the money supply and the growth of the S&P at 7-8%, like it's basically the same chart. So I don't know if that was a conscious thing or an unconscious thing, but I think even before the death of 60/40, we had already sort of fused the concepts of saving and investing. I call it like saving and gambling, because stocks really are gambling. And you're taking a bet on a management team or a sector or a brand, and it's like that's what it is. And um, the idea that the average person would have their entire investable portfolio allocated to stocks all the time, like, and be in the market all the time, is really not how it was. It's definitely not how it was when our parents were working and planning for the future. And people would have been saving. They would have had a mixture of saving and investing. And this is actually what I think Bitcoin is providing again, and why we call our launch product Bitcoin Savings Plan, because I think one, most people actually are pretty risk averse when they think about what they want to do to accomplish their financial goals. And if we did talk about it like what it actually is, like it's gambling, like the average person really wouldn't prefer to gamble the money that they've been able to save, with the hopes of just trying to keep it in front of melting purchasing power. So
It was me. I was that exact person. I was young and financial advisor that my dad had recommended me to, and I just put everything in stocks. I was basically like, I'm young now, I'll quote unquote take the risk now, and then when I'm older, I'll start converting it. But you're exactly right. At the end of the day, I just wanted to save. I mean, and it's funny you say that because that is actually how my dad pitched it to me. He's like, this is how you save for the future. This is how you put money away. And it's like, well, okay, why am I not putting it in cash? And it's like, well, you can't. Or why am I not getting a 3% CD? It's because you're going to lose money in the long run. And I mean, I really started, I mean, I started back when I was younger, but, I went into the workforce in 2006. And that's really when I actually had, good paychecks that I could start consistently putting a good chunk away. And that's exactly what I did. I was one of those people. And that then it was, well, your financial advisor is like, yeah, we are gambling, but we're going to spread all this gambling. We're going to bet on the Patriots, Chargers, and Steelers. And then, like, one of them will win, maybe two of them will win. And it's like, the whole concept, looking back on it, understanding Bitcoin now, it's so ridiculous, and it's so true that when you have a framing of saving versus, quote unquote investing, but you're right, if you're investing and know what you're doing and are reading the earnings per share charts and blah blah blah, okay, um, you're still gambling, but at least it's like educated gambling. I mean, I was just like, click this fund, click that fund, buy some Apple stock, whatever, and it was, I didn't know what I was doing, but it was like, I know I can't hold dollars.
yeah, yeah, and like that's the idea, right? Where people thought then all of a sudden that de-risking was holding some kind of like Warren Buffett style stocks, like we'll hold some Coca-Cola, and that's your but it's yeah. So you know there's so many information gaps around Bitcoin still, and this is where I think we just have a tremendous opportunity to help educate people and understand the applications of Bitcoin as a financial tool. And the concept of unprintable money is is an abstract idea. Like, you have to go through a number of different doors to get to a place where you can properly appreciate what a significant innovation this is. Like, it's, in my opinion, this is the most significant thing that any of us have been alive to see. And in spite of that, and it's been around for 15 years, like, a minuscule portion of the population understands why that thing is valuable. So yeah, I mean, I think that if we go back to how that would have been, and you go way back, right? Like 150 years ago in the Industrial Revolution in England, like ordinary people didn't even have access to investing. So like, and again, this is how it would have been for most of human history, where you're just trying to preserve what you've earned, and you're not trying to consume immediately and put it somewhere that it won't be, eroded over time. And that's really what unprintable money offers. And it just so happens that we're at an early stage of the life cycle of the adoption of unprintable money that it is actually, it's outpacing because um, there's just, barely anyone has joined the party yet. So, I think that in addition to solving this core problem, which people don't necessarily understand very well, you have the additional upside that comes with participating early. And this is like, um, yeah, it's just a really exciting thing. I think like most people when they're trying to make those investment decisions, it's more about trying to find that holy grail of investing, which people didn't necessarily have the verbiage to articulate, right? I think that it's exactly what you described. And my mom was teaching me the same thing. We used to, put our Christmas money we would get in a bank account, and then we would go to the bank and get them to print in the bank booklet, and so that we could see the interest payments, and we'd learn about 2% inflation, and so like some of these bedrock things. But everyone is searching for the thing that is going up faster than the value of money is going down, and I think the market is converging on Bitcoin, actually pretty quickly. But for that reason, this is the same phenomenon that caused everybody to pile into Airbnbs all at once. Like different bubbles kind of pop up. I think as a result of this mass you know focus on trying to find this investment holy grail. And this is another beautiful thing about Bitcoin, right? Is that it's so simple, right? It's not a business. There's no cash flow. Like there aren't any variables. It has uniform properties that never change, and everyone can sort of independently evaluate on their own. And then in addition to that, it is just this incredibly useful thing that is a store of value, a medium of exchange. It's the perfect form of collateral. Like, yeah,
It's crazy that all of the amazing characteristics about Bitcoin are actually what make it a hang up to most of Wall Street and most of the investors. Like, oh, we don't have cash flow. I remember, my wife, we were talking about keeping our place as, we're probably going to move here. We were talking about, do we want to keep our condo and uh, rent it out, blah, blah, blah. And it's like, well, we have this cash flow. And I laid out for her, I'm like, okay, here's the cash flow. Here's your quote unquote return on your investment. Bitcoin's appreciation of, let's be conservative, 20%, destroys the quote unquote cash flow out of there. But the appreciation of an asset versus actual physical, I shouldn't say physical, digital income streams, there's some disconnect there where people are unable to think that the appreciation of something's value is a they're unable to see that as a better form of quote unquote investment, or I like to say an increase in your purchasing power than the income coming off of something. And it is very ironic that like the thing that makes Bitcoin better is actually a hurdle for many people. And another hurdle too, especially when I was at my former company, I had a 401k provider. I had a plan that was approved by the company, and forever I was looking to get access to it, get access to Bitcoin through my 401k. I couldn't do it even when the ETFs got approved. I still couldn't do it. And the product you're offering, I'm wondering what your thoughts are on. Is this just going? Well, first of all, why don't you tell us about the product suite you're offering, and then do you think it's going the 401k, the ability for a company to integrate this into their business? Is this an opportunity for people to just simply get exposure to Bitcoin, to buy actual physical Bitcoin, that probably otherwise were just too lazy to do their own research. It's just like, oh, okay, I should just click some allocation here. I think in my opinion, there's a significant amount of people out there who are just looking for some easy way to access it. And it's like, if it's not in my plan, if I can't do it, I'm just not even going to bother. So
Mhm.
whatever. But curious as to your thoughts, or if you've actually seen this firsthand already.
Yeah. So Bitcoin Savings Plan is a product that runs through payroll. So our customer is a company, although we serve their employees, um, and we do contributions or purchases in a few different ways. They can be a deduction of net pay at source, which is one way, and that on its own is a thing of value. People definitely save better when the money just comes off of their paycheck, and like they don't have to manually sort of have the discipline to pay themselves first. Um, and then we offer a variety of different ways an employer can, uh, pay their staff in Bitcoin as a perk or a reward, or create some kind of a matching program to whatever the employee decides to save. Your question about 401k, my personal opinion on these locked up products are that we're also going to sort of move away from that world over the next 10, 20 years. And what I think people will ultimately end up valuing is having access to saving in Bitcoin in a liquid way, the same way we used to think about a savings account, where we were sort of moving in and out of money. Like it wasn't, that was just not money that we were gambling. And you may still want to spend that money, but you just wouldn't want it to be gambled in the stock market, or you wouldn't want it to be um, tied up in something that you couldn't actually access. So by saving in Bitcoin, you are creating an asset that you can, and it will certainly get easier to borrow against. And I think there's like huge potential future application for young people to save for their first home by saving in Bitcoin. So your down payment for your first home, which you might save when you've started a job that's offering Bitcoin savings plan, is growing as you're putting your time in, and it's accelerating your ability to get to the point where you can afford that entry into a home. And so again, they're just saving, and so I actually think a critical part of it is that you're able to access it. And the difficulty, or the benefit of it being in Bitcoin, is that there is still some pain in cashing it out. Like if you're cashing it out, you're going to have a tax event. Oh, and you're going to have to also go through the effort of cashing it out. So, that might not be enough. And, everybody saves differently, different discipline around it. But yeah, I think the core idea is kind of this notion of Gresham's law, where if you just had the opportunity to immediately convert money that you didn't need for short-term consumables into the best form of money ever, and you were able to do that through your employer and do it in a way that made it hard for you to spend it before you had the chance to spend it. This is a really cool innovation, and this is how I think about um, how people are going to start thinking about saving. Like we really do need to protect ourselves from the 100% certainty of currency debasement. And it doesn't matter where you live, and where you live just depends on how urgent the need to protect yourself is. Like where I live, it is certainly more urgent than what you guys are experiencing. And a steak here costs about
Oh, it's
$100.
it's pretty needed here.
Yeah,
Yeah.
yeah, exactly, right. And this is a problem that accelerates over time. So, one of the things about government media that really irks me is the disingenuous representation of inflation as something that comes down. Like inflation's down to 2%, and it's like this is the idea where if I'm gaining 5 pounds a month, and then one month I gain 2 pounds, like I haven't lost any weight. But that's how the
I'm
media
still
talks
getting
about
obese.
inflation.
Yeah. 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 It's insane. Yeah, it's they talk about the relative change as opposed to the gross
Uh
accumulation.
huh. Yeah, so this is a problem that is absolutely going to continue to get worse, and we will have $20 cups of coffee and $50 cups of coffee. It's just difficult to predict on what time frame. And so for this reason, Bitcoin is actually, it's an essential defensive tool for a problem that has a 100% certainty of getting worse over time. This is why I think like every executive, every human resources leader, every person in compensation rewards, like you really don't have the option to ignore Bitcoin anymore. And I think like getting back to an earlier point we were talking about, um, risk. So one of the things I think that often goes wrong with people who are outsiders to Bitcoin or trying to gain an understanding is confusing the risk that Bitcoin may at some point be worth less in dollar prices than it is today versus the risk that Bitcoin, the technology, may at some point in the future cease to exist. And when people are talking about the risk of Bitcoin, they are often confusing the two and probably placing too much emphasis on door number one, which has a pretty high likelihood. Like I'm fairly confident that the Bitcoin price will one day be lower than it is right now. Like this is part of the nature of how it exists. And but what is the likelihood that Bitcoin will not be an enduring technology and something that gains traction over time as more people understand that it's an elegant solution to the most pressing financial problem of our time? I would say the likelihood of that's pretty low. Bitcoin is almost like, Michael Dunworth, he's one of my favorite Bitcoiners, says Bitcoin appears to be the first thing humanity's ever created that can't break. And as something you might want to own, like, if somebody said to you, like, "Hey, I've invented the only thing that can never break. Do you want to own any of that?" That on its own is a pretty interesting proposition. And so yeah, I think that it's just something that people are gonna it will transform the way people think about financial tools in the same way it will transform the way people think about everything else. And it's going to cause like a reordering of priorities. And if you could just save money, I think there's less incentive to lock it up. Like in Canada, our version of a 401k is an RSP, and you get a tax deferral that you pay then in the future when you're old enough to pull the money out of that RSP. But what has actually been true over the last 30 or 50 years is that the tax rates continually increase over time as well. And like, I'm not sure how high they can go. Like, they're already, for some people in Canada, over 50%. Maybe they can go to
They're going to
80.
keep trying.
We'll see.
They're, I mean, they're going to have
Yeah,
to. I don't see how they can't keep ratcheting these taxes up more and more.
totally. And
They
we
they have
started
to
at
do it.
2%,
So,
right? So, like,
well, it started at
right.
0 in the U.S. at
Yeah,
least.
no,
Yeah,
yeah, it was the same here.
yeah,
And it was another
yeah,
temporary measure. There's nothing more permanent than a temporary government measure.
yeah.
Um, So the notion that tax rates will continue to go up over time, I think, is very likely. And so the idea that you're deferring tax and you're going to somehow come out ahead has also just not been true for the most part. So I don't know like why anyone would if trade the optionality for that as the problem becomes like better understood. And I wanted to actually come back to something you said earlier that I've been thinking about because you were talking about cash flow and houses, and this is another thing that I think people have also really not conceptualized. I saw a post on Twitter a couple days ago, maybe it was yesterday, about a home in Palm Springs that sold for 1,000,001 6 years ago, 5 years ago, and just sold for 665,000. So that house is down, 50% in 5 years. But the Bitcoin price,
Did you see? Did you see? By the way, there was a Denver office building that
yeah,
I think sold. I think it was 9 figures, and then it was sold for 3.2 million.
yeah, exactly.
Yeah,
So this phenomenon is happening all over, where real estate doesn't only go up, but it's not about the fiat value of that transaction. It's about the opportunity cost of an asset that's denominated in depreciating money and the additional sort of counterparty risk complexity that comes to winning that arrangement when people are thinking about all these different strategies and vehicles where Bitcoin is truly not exposed to those things. Like the price in dollars does go up and down, but this is that the parameters around what it is don't change. So
Well, how about the fact that, as we were talking about earlier, they're going to have to keep ratcheting up the taxes? I was actually having this conversation with someone on Saturday night who was in real estate, and I said, "What if where I'm in Chicago?" I said, "What if we get a mayor like this guy Mindani, or I don't even know how to pronounce his name, that's coming to New York? He wants city-run grocery stores and benefits for everyone. You think your property taxes are going to stay the same? I mean, if I was a New York citizen, I would put in my budget a potential for a 50% property increase and then make a decision about my life, whether I wanted to deal with that or not. And that is a very, very real possibility of holding real estate that at some point, and especially in these big uh, bureaucratic cities, that they're going to need more juice from the people and they are going to require more taxes. And there's a distinct possibility you wake up one day and your property tax bill has doubled or gone up 50% or gone up 75%. And most people probably have already lived through something like that already, and they're just going to keep doing it more and more and more.
yeah, it's crazy. I mean, a lot of the big cities here are broke, and I think it's the same south of the border. And um, you're at the mercy. You know, these are again like there's Bitcoin confers a type of ownership that other physical assets do not. And this is another thing that regular, the non-Bitcoiners also don't really understand. And I think it partly has to do with psychology of Bitcoin being a non-physical thing. But you know, yeah.
Sorry, I derailed you from your real
Oh,
estate point. You were,
yeah. So maybe just to put a
yes,
bow on that, like
yeah.
while these physical while these real estate assets are depreciating in dollar terms, the Bitcoin price is going up like 5, 10, 20 times. And so the compound missed opportunity is a lot more than the 50% write down. It's like, you know, 100 times loss. And this is another thing that I think like, I mean, for me, we're in the early days of just kind of a structural reevaluation of commercial real estate in particular, because AI and the pandemic really changed the value of office space, and this is why all these you're seeing like triple A rated office towers and all of the kind of like tier two cities in the U.S. experiencing these kinds of write downs, like Minneapolis, Portland, Denver, where it's like 90% loss over 6 or 8 years, and shopping malls, because shopping has also really like dramatically transformed in that same time period. And a lot of these kinds of properties just have been a very successful way to store capital. And I love this term, the dematerialization of store value, because you know over the last 50 years there's like 50 physical things that now exist inside your phone. You used to have a camera and a flashlight and calculator. All these different physical tools were dematerialized and turned into software that lives on your phone. And like that's what Bitcoin is doing to how we think about saving. And it makes more sense to store your financial energy in something that doesn't degrade over time or isn't subject to the crime rates or who the mayor is, or needs a new kitchen. These are just old ways of thinking about how we did things before a 0 to 1 innovation occurred, and that's what Bitcoin
And
provides.
it, And to your point, all of those things in your phone that dematerialize these physical things, what are they? They're just software. Well, guess what? Bitcoin is monetary
Yeah,
software. So it's why wouldn't it dematerialize the sort of physical infrastructure of money? It's the exact same analogy.
yeah,
So and it's going to be more convenient to use. It's going to be easier to use. It's going to have better monetary properties, and there's just going to be no reason to be stuck in this archaic way of saving. I mean, anyone who's owned a piece of property, if you've bought a house, if you had commercial real estate, the amount of paperwork and deed transfers and it's there's a reason there's real estate brokers and property attorneys and escrow agent. The whole process is so insanely complex and nuanced and super niche things you need to know. And I actually did a lot of this professionally in my career, taking properties back for a bank and dealing with it. There's just all this expertise and stuff that's required that is just completely onerous, and it drags it drags down your time, it drags down your energy, and there's just no need for any of that stuff with Bitcoin. But so that I looked up that office building. It was 200 million and sold for three. It had an appraised value of 200 million in 2019 and sold for 3.2 last week. So awesome job on that. So yeah, to your point, imagine not putting $200 million or putting 196.8 million into Bitcoin in 2019, holding on to that office. Uh, combined with the $196.8 million loss.
Mhm.
So got to be feeling pretty good about that. um, but okay, so along those lines, in terms of saving vehicles for the future, people, one of the things uh, you were talking about earlier was that people are going to start asking for this. It's going to change the way these programs are instituted in these companies. One of the things that drove me absolutely nuts at the company I was at was it was basically this closed source system of even options I could choose from. There were like 12 options, and 10 of them were BlackRock, Vanguard, and then I think there was a Fidelity fund, which I ended up moving like almost my entire 401k into because I didn't want to support BlackRock and Vanguard. And then like a REIT option, and then some other bond options or whatever. And it's like, well, how is it even possible that these are the things that are quote unquote chosen for me, forced upon me? And like, I figured out very quickly that 401ks in general are a scam because you should just be putting your money in Bitcoin. You should be putting money away for retirement. You should be saving in something, but the sort of 401k model we have now is a total scam because you're forced into investment options that you don't know anything about, don't necessarily want to be in, but it's what everyone told you to do. And now there's this better asset. So, will you talk about your products available both in Canada and the US, how they look, sort of the, hate to say regulatory and legal, but like how they fit into that world? Why, what, what, what are they considered on in that sort of frame?
Yeah, I mean, it's kind of um, it's non-cash compensation. And there's and I'm not going to speak to any specifics. I guess we're talking about many different sort of jurisdictions, and so I'll just keep it in broad
Yeah,
generalities.
so just generally
Yeah,
for what you have for Canada and then what you have for the
yeah,
US, and
yeah.
sort of the roles and they
So
fill comparative to, what we have now.
it's the same in Canada and the U.S. Like legally, you need to be paid in dollars, and so this is where like when an employee's taking a net pay conversion, there is a dollar remuneration happening, and then a conversion to Bitcoin. And then if the employers are offering Bitcoin, then that's like a taxable benefit or taxable income in a form of non-cash compensation. And so I think that for us, where I think we were talking about this when we were talking last week. It's kind of like treasuries right now, where we see the most traction are people who understand, who are in a company where they have some ability to affect strategy, and they understand that this thing is something that's going to turn out very good for people who participate. And so, like our biggest customer, current customer, has been running a Bitcoin savings plan with us for a few years. And when they started, I want to say the Bitcoin price was in the mid 20s Canadian. So it's like 150,
Mid
160,000 Canadian.
20,000s.
Yeah,
Yeah,
yeah.
yeah.
So an employee of theirs who would have put away $10,000 during that time now has $60,000. And there really isn't another way that that could have been accomplished. Like there isn't another. So that company has actually, in terms of like real value provided to that employee, actually appreciated the salary. And so like companies are always under this continual pressure to provide annual raises. And why do they need to do that? That's not the company's fault. It's because the money is becoming less valuable. So Bitcoin can solve this very, like pressing problem for everyone, every company, that's just like the ongoing need to pay people more because the money is melting. And um, the idea that somebody would just instead have allocated like money that they were already using in a savings plan to, an IBIT or, these Bitcoin ETFs. Like the only people who would do that are the people who are buying Bitcoin anyways already. And so what our products really do is force an exposure to people who would otherwise not have done this. Like, and going back to this largest customer of ours, their leadership team just has a ton of conviction around this and put money behind it, like an incentive, for a matching incentive for people to start saving in Bitcoin. And for the people who did, it's worked out incredibly well. And just as a result of that, there's lots of people we've done different workshops with their staff, and people who don't necessarily understand all the properties of Bitcoin, but they do understand that it's worth way more than what they put in. And for a lot of people, like that's enough, right? Like most people don't know how a car works, and that doesn't prevent them from getting in a car and driving it. So I think this is another thing about the simplicity of having a tool that removes the gambling and that separates gambling and saving. Because if you can get to a place of comfort where you've seen Bitcoin just doing what it does over a long enough time frame, then yeah, I really believe that for most people, like that's great, that's enough. And that kind of comes back to that idea about discerning the difference between the risk that the price might fluctuate and the price that, or the possibility that the technology itself might encounter some kind of like critical problem.
So, man, that's something we talk about at Sovereign all the time. Is that as we get into these businesses, we're kind of in this stage now. We launched in November. Technically, we really launched like the end of May, beginning of June, and we're just starting to get in these businesses, starting to get them a little bit educated, starting to get them set up. And what I tell everyone at Sovereign is like, I want in down the road as we establish rapport with these companies, as they're happy with our treatment of them, getting them set up. I want to start instilling this message in their company and start getting this out to their employees that hey, we're help coach them on how to deliver this message to their employees, that we care about you, we're giving this offer to you because the wage market is competitive and we understand you can go other places. We have massive margin compressions, our input costs are going up, but we value you as a member of this team and we want you to grow with us. We want you to be here for a long time. This is a low time preference approach to valuing this company, valuing you, and making you a part of what we're doing here, as opposed to just the 19th entry in a spreadsheet of our labor input. And I personally, I think that is such a powerful message. And to your point, this company that's been with you for 3 years, it's so perfect. It's like, yes, it's taken 3 years. It probably at the beginning to these employees sounded a little crazy. Maybe I don't know what's going on, but I guarantee every employee that has put their money in that fund, stuck with the company, they're never leaving.
Mhm.
There's no way. Like they're going to see that and go, holy cow, this employer took care of me. They really had my best interest in mind. And look at the results. I mean, how can I argue with this? I would have never, my $18 an hour salary was really a $50 an hour
Yeah.
salary. And like, I couldn't have gotten that somewhere else. And I'm going to stay with this person because they steered me correct. And I think, I personally believe that it's going to bring back sort of the old school. You worked at a company, everyone just hops jobs now because it's like, oh, I can go get 10 grand more over there. I mean, I saw that every single day in the company I worked for. No one had any loyalty. It was like, yeah, go get your extra 10 grand. Why wouldn't you? You're doing the same thing. You don't value these people. The owner of the companies, and you know, probably in his vacation home down in Florida or in some remote location where you don't know who he is. You have no connection to anyone, and it's like, yeah, people are just going to leave. They have no loyalty. They can go get whatever anywhere else. You didn't enrich their life any. You just gave them a paycheck, and it's like now you're giving them a paycheck. You're showing them that they matter to the company, and it's like here's the end result. And I can't wait for that to start manifesting itself in the future as companies become more cohesive, and actually you actually want to work there, feel valued. And there's a lot of jobs out there that suck. They suck, and it's like, okay, yeah, I maybe I don't want to be doing this. I'd much rather be fishing or playing golf or something. But I need a paycheck. But going in doing something where you put your time and energy in, and then you get rewarded for that down the road, even if the job sucks, even if you don't like it, even if it's miserable, there's something rewarding and enriching to your soul and your psyche that's like, oh, I don't hate this as much. I don't feel like I'm showing up as an indentured servant here anymore. Like I matter, I'm part of this team, and that's been proved to me by the owner.
Yeah. I mean, and like, it's not hard to imagine a world there when, employees at one company that were experiencing that do decide to leave. They want to go somewhere else and they expect it somewhere else, So I think
Yeah.
it's like email, right? Like there would have been an early time where people were trying to figure out how to use email in the workplace. And I think very quickly you couldn't run a business without it. And that's where I think we are going back to that point I made earlier about, people, maybe I don't think you have to be pretty far down the Bitcoin rabbit hole to conceptualize like what this technology will mean for the digital economy and even just people's willingness to interact with money that can be printed out of thin air when there's an accessible alternative that has a fixed supply. Like that's already real now. It's just that still very few people understand it. But if you think about um, this is another thing that's happening right now as this paper Bitcoin summer and corporate treasuries are exploding. Are smart people who understand an opportunity here are getting really creative and doing some very innovative things to outcompete other companies. And that's what the market is all about, right? And as companies start to understand that they can position this thing in a way that is going to help them recruit and retain the top people that are going to be essential to their own sort of corporate business goals. um, you know, Bitcoin just, this is back to the very first thing I said about, originally I just thought it was insurance for pensions, but it has a sweeping potential application for how companies think about total compensation, recruitment, and retention.
Speaking of paper Bitcoin summer, I would be remiss if I didn't ask you, what is the custody arrangement with you, with the employer? How does that work?
Yeah, we originally were offering Bitcoin Savings Plan at launch as non-custodial, and there's some great, sort of sovereignty maxi Canadian Bitcoin companies that we were trying to follow in the footsteps of, and we just kind of discovered that our as our customer as the employer, we need as few barriers to entry on this thing as possible. And what a company with 50 employees or 1,000 employees really needs is something that their employees aren't going to be fearful of or need like a massive educational lift to participate in. So we decided to go the custodial route, and we built that in. So in Canada, our custodian is Balance. Balance is Canada's largest and oldest digital asset custodian. It was important for us to have a Canadian custodian for the Canadian customers, and we will have a US based custodian for our US based customers, and that will be kind of announced in the next couple of months. And so basically, yeah, we discovered with the non-custodial product is, if you have 10 employees and you're the sole decision maker in a company, it's easy to get pizza in and get everybody set up with a Trezor, and away we go. But our real vision is creating this suite of products that, like, when the day comes that Amazon decides they want to offer Bitcoin to their staff, that they have a tool that would meet their needs. And that's really what Block
So
Rewards is all about. We want to be able to provide the same type of experience for, as a small business as we would for, Fortune 1000 companies.
So I would hope by the time Amazon is coming to you for coming to Block Rewards for a Bitcoin savings plan, that they would have the resources and the know-how somewhere in the company to actually be able to custody their own Bitcoin. But is that an option for the companies if they want to do that, or does that violate sort of the terms of the 401k or the plan up in Canada? I apologize, I forgot the acronym up there. But
Yeah, that's a great question. So when companies pay employees out of their own Bitcoin, it creates an additional complexity of a taxable event happening for the employer. And that, I think, is one hurdle that is why more companies don't offer paying in Bitcoin today. So, our role as the middleman converting fiat to Bitcoin creates sort of a, a, a simplicity that I think is, for the near term, going to make a lot of sense until we see, a definitive change on, transactions under a certain size being tax exempt. But yeah, so for that reason, for now, we take fiat from companies and we send their employees Bitcoins. We do it in wallet we provide. It will be, we will move. So right now, the assets are custodied to the employee. So, and they're on chain wallets. Um, it's very easy to withdraw to self custody. We will in the future offer direct deposit to a self custody wallet. Um, and honestly, like, I think that where this goes, and this might be another 15 years, but I imagine that in the future, yeah, companies will be paying their employees Bitcoin out of their own Bitcoin, and our software may evolve into something that just helps them manage the payments and the accounting of it. And like, we kind of have to imagine that too. Like, I'm a lightning bolt. I really think that the Lightning Network will, especially in the, with the potential for like a US dollar stable coin to transact on Lightning in the short term. Um, we're moving to a near term future where money is streaming in the same way that information is streaming now. And I think that that will create just new ways of, being paid in real time. I think we will pay for the things we consume in real time. So you might actually, see your Lightning wallet be drained of sats as you're watching like a Netflix show instead of paying a monthly subscription. I think that money will be
not only is it being drained from Netflix, but it's going to be drained from your power provider as
right.
well.
Yeah, totally.
Yeah.
Yeah. So I think that's kind of, the technology is evolving in a way that is just going to fundamentally transform how value moves. And this is that thing we were talking about earlier about, like, the dematerialization. So as part of that, we're not going to think about, fine art in the same way. Like, it'll still be beautiful to look at, but it won't be the thing that we use to escape inflation anymore. Um, people are going to value money that is uncensorable and can be spent uh, without, restriction. I firmly believe that, and depending on where you live, I think certain areas are going to value it at a premium. Uh, a lot of things are going to change.
No doubt. So I apologize. I might have framed that question wrong. So in the Amazon example, uh, instead of Amazon paying their employees in Bitcoin, I guess my question was, could they use your service, take the dollars, convert it to Bitcoin, but instead of it being held at a custodian, that Amazon could hold it themselves? Or does that violate some sort of legal uh,
So
arrangement? Like, could Amazon be the custodian for their employees?
that's a great question.
Basically,
I mean,
yeah.
I suppose there aren't really any. There aren't really.
Examples, I'm sure.
Yeah,
Yeah.
I mean, like, so our custodian, if they were to use our service, for their employees, I guess technically that's what they would be doing. I mean, is Amazon going to get into being a Bitcoin custodian? Probably eventually, like they will probably
Yeah.
offer everything one day. So, but yeah, I mean,
I was just
yeah,
curious. Yeah. I think that would be interesting. And then you could have like a company providing a proof of reserves for all their employees.
yeah.
But I guess you wouldn't know what everyone other else's claim on the reserves. But anyways, I'm just thinking of where this could all potentially end up and how it might look one day.
Oh man, I mean, I like there are lots of different, like in the same way every industry could change. Like there are just lots of cool ideas that could be built or haven't been thought of yet, and private companies that have ESOP programs are going to be talking to their employees about MNAV or something at some point too, right? And like, um, yeah. So I think the future, we're not going to be talking about Bitcoin treasury companies. We'll just call them companies because every company is going to be saving in Bitcoin too, just because it just makes sense. And as that evolves as well, the general level of understanding of how this thing works, I didn't mention this earlier, but the point about people saving for their first home in Bitcoin is super relevant because Fannie Mae and Freddie Mac are going to be accepting Bitcoin as collateral in a mortgage application, right?
That was something I was working on with a friend of mine, Kelly Lannon. Forever, we were trying to get a Bitcoin backed mortgage product, and we just found it impossible that you couldn't. None of the private credit people wanted to do it because anyone that understood it, they would just go buy the Bitcoin themselves. And really, what you needed was Fannie and Freddie to create money out of thin air, to be the mortgage, that rate that comes with that, and then be able to be allowed to use your Bitcoin in lieu of cash as collateral.
Hmm.
And we to the extent that that comes down, we actually provided someone in Cynthia Lummis's office all the parts of the in the U.S. The parts of the law that declared what Fannie and Freddie would accept as down payment and what they would be able to purchase on the mortgage. We actually provided some language in those sections, so I hope maybe they will use it or that comes to be. But yes, once that happens, I mean that's just a total game changer.
Hmm. Very cool. That's awesome. You
Yeah.
guys were involved.
Yeah, well, I don't know how much we were involved, but we tried a lot and we kind of just said here here's the sections that need to be changed and here's what they need to be changed to, and so I really hope that happens. I mean that would just unlock so much opportunity for bitcoiners. I mean I
Hmm.
can't even. Yeah.
I mean, and so much incentive
But
for other people to investigate and start saving in Bitcoin. Like,
yeah,
yeah,
exactly. And at that point it's like, well, why would I even bother saving my dollars for a down payment? Like now I can just use Bitcoin
yeah.
and like it. There's just absolutely no reason to.
I mean,
I mean, I was, yeah. Go ahead. Sorry.
it's going to force a cascading series of reevaluations of like the economic calculus of different decisions that we take for granted today is normal. And one of them is how much of my money should I gamble in the stock market if I can just do this and it's actually radically outperforming a 99% of stocks. And we talked about real estate, like basically, every other thing that eventually over a long enough period of time proves to not go up faster than the fastest thing. That's really the risk. Like the Bitcoin is the hurdle rate.
It is. And so is your product officially available in the US now? Or I know
Not
you
yet.
said there's gonna be
No,
an announcement in a
we're,
couple
we're
of
we're
weeks. Okay.
we're targeting kind of early Q4.
Okay,
Yeah.
awesome. Uh I mean, I'm sure there's plenty of people out there that would love to have this in their business and have this be an offering that they could put out there. So
We are taking like US waitlist customers now and certainly like talking to US employers. So, if you're listening and you want to demo the software, you want to get on our early on our early wait list. We'd love to talk to anyone and get that going. And we're super excited about entering the U.S. market and serving Bitcoiners. We want to serve every business. So
Yeah, and the website is blockrewards.ca, correct? That's probably the best way
yeah,
to reach
it
out.
may be .com depending on how soon you air this episode.
Okay.
We're in the process of that transition. And
Okay,
anticipation.
try
Yeah.
yeah, try .ca. If that doesn't work, try .com. And I mean, do you want to talk about sort of if a company is going to reach out to you and ask you about this, what's sort of the process? How long does it take? What's you working with them look like?
Yeah. So great question. On our landing page, you can book a demo fairly easily, and that will get you into our funnel, dealing with our sales team. And we're really still taking a very custom approach to help companies along in the way that they may need. And so we have educators on staff. Um, from the time a decision to move forward is made, we can get a Bitcoin savings plan up and running like within a pay cycle. So it depends on a company's ability to, we need to do some information gathering about the know your customer, anti-money laundering stuff that is a whole different
All
topic.
this fun stuff.
Yeah.
Yeah.
But yeah, that can all be done in fairly short order. Enrolling the employees, and all of this also depends on the size of the organization. So obviously, like smaller companies, medium sized enterprises is a lot simpler than an enterprise style customer. But um, yeah, we want to talk to everybody, and like I said, we're really open to like kind of custom solutions for people who want to pursue implementing a Bitcoin savings plan.
I hear you. I always hate it when people ask me like, so what's the typical plan or how long? It's like honestly, it seriously is so unique to every
Yeah,
business, and
yeah,
a lot of people are quicker to understand things. Other people are more cautious. Other people are just you do it, take it from Jesus, take the wheel, send send it, and so it really is differ extremely different company to company.
yeah. And we have like and this is already true of like total reward strategies and companies. There's like a spectrum of companies viewing their employees as an expense and companies viewing their employees as like the most critical aspect of the business.
An asset.
Yeah.
Yep.
And
So
so in our current block of clients, we see companies that only offer the net pay option, which is still really valuable for people who want to do it that way. And then on the other end, companies that are really getting behind these compelling matching offerings to make it difficult for their staff to not participate. And then everything in the middle, like a friend of mine runs a business with 6 employees. He gives all of his staff $25 in Bitcoin every 2 weeks, and that's been enough that like they're regardless of what they put in, and all of them have started putting some of their own money in. They're putting more in over time. Like that going back to something we said earlier, this thing about the compounding growth. The beauty of this thing for an employer is that if it continues to behave the way it has, you don't have to wait 20 years for people to see the effects. So after a year and a half, 2 years, 3 years, it's pretty obvious. You don't need to be a wizard, and that's really not true of like myself. I had I rolled out of a pension when I left my first sort of like decent job, and that money was locked up in an index funds, kind of like up 7%, down 4%. It's like maybe up 8% cumulatively 5 years later. And this is kind of like what's normal. Like I wasn't really watching it. There weren't a ton of options like for fund selection in there, and I don't know how much differently I could have done. So it Bitcoin behaves very differently to what people are used to, and I think intuitively average people who aren't really dialed into what's going on with Bitcoin understand that the price has gone up a lot, but until they see their own money going up in value a lot, it's just hard to conceptualize.
gosh, I love hearing that. I mean, that is legitimately the reason I left my job to come work at Sovereign because you telling me that story, I of the guy that put $25 a week for his employee. That company is going to survive.
Yeah.
Like that company is going to be around for another 30 years, 50 years, however long him or his kids want to run that business. It's going to be around, and like that is the entire goal of what we're trying to do at Sovereign here is be like this thing will set you apart and will keep you around for generations, and trying to get that message to them and then actually seeing it in real life being like, boom, I know these guys are good. um obviously there's, someone could go off the rails or develop a drug habit or a gambling addiction or something, but it 98% of these companies that start taking this strategy now, I know we're going to be there 20, 30, 40 years down the road.
Hmm.
And that's what's so exciting about all this, and what we need too. I mean, so many of these businesses have just been destroyed by red tape, regulation, monetary debasement. It's just an endless sea of navigation
Yeah.
from trying to get out of the way of the government. And it's like that now we have this tool that will solve 70% of that problem.
Yeah.
And it's just so cool to see people actually doing it, manifesting it, and it actually coming to be. And as we talked about earlier, just the restoration of the sort of employee employer relationship, and get- getting away from this Marxist divide, management versus labor, and all this nonsense. Like it really can just be solved when everyone does well and everyone benefits. And the cliche Bitcoin fixes this. It really helps to fix that broken relationship of sort of the people in the C-suite and the people not in the C-suite, and you just love to see it.
Yeah, I mean, and like if you've protected yourself from the government stealing money from you, then you are less in need of going out and stealing from other people. And this is the basis for
Yeah, so true.
yeah.
That's so true. All right, Scott. I really appreciate your time today. I don't want to keep you too long, but I know we talked about the website. Where else can people reach out if they're interested in implementing this into their business?
For sure. And thanks again for having me on. I love
Yeah.
yeah, it's been
Oh, and you have a podcast too. I apologize. So please let people know about that.
Oh yeah, yeah. Our podcast is called The Block Reward, and the audience, the aim of for that podcast is kind of the employees that might find us as a result of using our products through their employer, and so they try to be light conversations, different topics every week. It's a generalist conversational Bitcoin podcast. Episodes are every Tuesday. It's on all the different platforms. You can find me on LinkedIn, and I'm fairly responsive. And we're active corporately on LinkedIn as well, and you can catch me on Twitter at the handle is Lantern Bitcoin.
So I can vouch for Scott's responsiveness on LinkedIn. He was very accommodating and friendly, as many of the Canadians are anyways. So I I appreciate you reaching out, Scott, or reaching back out after I reached out, and really enjoyed talking with you. I'm so excited for stuff like this that I know is just going to become ubiquitous in companies all across Canada, America, and eventually the rest of the world as well. Is this is just demanded, needed, and desired. So awesome talking to you, Scott, and appreciate everyone that tuned in. And feel free to reach out to Scott if you want to talk about implementing this in your company.